Life is a constant game of choices. Sometimes it's as simple as deciding what's for dinner. Other times, the stakes feel monumental and life-changing. But what if every decision carried a weight you couldn't predict? What if each step was a gamble between progress and ruin? In trading, just like in life, success isn't about winning every time. It's about managing the risks that come with every choice. Risk management isn't glamorous, but it's the difference between surviving the storm and losing it all. But what happens when risk takes a life of its own? When it stops being numbers on a screen and becomes visceral? Let me take you inside the House of Mirrors, where one man learned that risk stops being just a number and reveals its true face, a reflection of our choices, our fears, and the shadows we dare to chase. In the heart of New York City, amidst the towering skyscrapers and the constant hum of ambition, there was a place spoken of only in hushed tones within financial circles, a shadowy establishment known as the House of Mirrors. It wasn't marked on any map, didn't have a website, or even a whispered address. It simply appeared to those who needed it when they least expected it. It wasn't a casino, no clattering chips or spinning roulette wheels here. This was something far more tailored, a labyrinth of reflection, where the stakes weren't measured in blind luck, but in the cold, hard calculations of risk. Thomas wasn't your typical Wall Street wolf. He was an engineer, a meticulous architect of algorithms for a high-frequency trading firm. Day in and day out, he built the digital scaffolding that traders climbed to reach their dizzying profits. He understood risk, knew its mathematical contours intimately, but he never felt its bite. Or so he thought. One evening, after the market's frantic pulse had finally quieted, Thomas found a stark black envelope on his otherwise pristine desk. No return address, just a heavy wax seal bearing an unfamiliar symbol. Curiosity, that relentless human itch, overrode his initial caution. He carefully broke the seal. Inside, a single, crisp card read, "You are cordially invited to the House of Mirrors. The game begins at midnight. Entry is optional. Exit is not." Below the chilling invitation were a set of coordinates. A shiver ran down Thomas's spine, a mix of apprehension and a strange, undeniable pull. He had a wife, a quiet life in the suburbs. This was insane. But something about the invitation resonated with a deep, unspoken part of him, a part that craved a different kind of challenge. He found himself standing before an unmarked building in a desolate industrial district. A single door, slightly ajar, cast a sliver of flickering light onto the cracked pavement. He hesitated, then pushed the door open. The inside defied logic. It felt vast, infinite. Walls of polished mirrors stretched in every direction, endlessly reflecting his own uncertain figure. It was disorienting, unsettling. Then, a voice, deep and resonant, boomed from everywhere and nowhere at once. It felt like it was inside his head. "Welcome, Thomas. Tonight, you will play not with your hands, but with your mind. Here, you are not the builder of systems, but a player within them. Risk is no longer a dry number on a spreadsheet. It is visceral." The mirrors began to shift, the reflections blurring and reforming into pathways. Glowing panels materialized on the walls, each presenting a choice. Path A, a corridor bathed in warm, inviting golden light. Above it, the words, "Steady gains, minimal risk." Path B, a hallway shrouded in deep shadows, the air around it seeming to vibrate with unseen energy. Its panel read, "High returns, significant risk." Path C, a mirror fractured into countless shards, the inscription barely visible. "Unknown outcomes, unforeseen consequences." Thomas felt a knot in his stomach. Path A was the sensible choice, the one his wife would urge him to take. But something about the shadowed path, Path B, tugged at him. It spoke to the part of him that thrived on solving complex problems, the part that believed calculated risks were the engine of progress. He'd always preferred the elegant solution, the one that pushed the boundaries. He stepped into the darkness of Path B. As he walked, the mirrors flickered to life, showcasing snapshots of his life. Lines of code scrolling across a screen, graphs spiking upwards, the celebratory high fives of his colleagues after a particularly profitable day. But then, the images began to twist. The graphs plummeted into red, news headlines screamed about market volatility. And he saw, reflected in the glass, the faces of investors losing everything. One image stood out, a close-up of his own hand, trembling as he typed in a command that resulted in a catastrophic loss. "Do you feel it now, Thomas?" The voice echoed, tinged with a hint of mockery. Risk is not a number. It's the weight on your chest when everything hangs in the balance. It's the cold sweat on your palms when you realize the consequences of a single click. The ground beneath him trembled, and the hallway abruptly split. One path glowed a warning red, a sign above it flashing. "Cut your losses now." The other shimmered an alluring blue. "Double down." He froze. Doubling down felt reckless, almost insane. But cutting his losses felt like admitting defeat, like erasing years of work. In his algorithms, loss cutting was a fundamental principle, a safety net. But here, in this surreal place, the logic seemed to crumble. He hesitated, caught in the agonizing push and pull of fear and ambition. And in that hesitation, the decision was made for him. The floor gave way, and he plunged into darkness. He landed in a small octagonal room, every surface a mirror. In the center stood a massive antique scale. One side was laden with gleaming gold coins, the other empty. A single, weighty gold coin hovered in the air above the center of the scale, suspended by a thin, almost invisible thread. "Place the coin," the voice commanded. "Balance the scales, and you may leave. Tip them too far, and you remain." The coin felt strangely heavy in his hand, a tangible representation of the weight of his choices. The scale's movements were incredibly sensitive. He carefully placed the coin, trying to find the exact center. But as soon as it touched the gold, the scale lurched violently downwards, the coins clattering. A deafening alarm blared, and cracks spiderwebbed across the mirrored walls. "You were fixated on the reward," the voice boomed, now laced with disappointment. "You failed to account for the inherent instability, the volatility of the system. You didn't hedge your position." The mirrors instantly repaired themselves, the scale resetting, the single coin once again hovering before him. "One more chance, Thomas," the voice offered, a hint of something akin to pity in its tone. "This time, consider the true weight of risk against the fleeting illusion of reward." Thomas took a deep breath, trying to calm his racing heart. He looked at the scale, really looked at it. He noticed the subtle imperfections in its balance, the way the thread swayed almost imperceptibly. This time, he didn't aim for the dead center. He placed the coin slightly off-center, using the weight of the coin itself as a counterweight, anticipating the scale's natural tendency to tip. He was no longer trying to force a perfect balance, but working with the inherent instability of the system. The scale steadied, the two sides coming to a gentle equilibrium. The mirrors around him dissolved, revealing a simple wooden door. He stumbled out into the cold night air, gasping for breath. The house of mirrors was gone, vanished as if it were a dream. But the lesson was seared into his mind. Risk wasn't something to be conquered or ignored. It was a constant presence, a force that demanded respect, vigilance, and above all, humility. The next day, he returned to work, a changed man. He was no longer just a builder of algorithms, but a strategist who understood that the true art of trading lay not in chasing the biggest win, but in managing the ever-present risk, in ensuring survival. And somewhere in the shadows of the city, the House of Mirrors waited, patiently, for its next guest. Some days back, a subscriber posted this comment on the channel.
"I'm trying to bribe my way into Wall Street so I can get that juicy illegal insider info they all get to make millions of dollars with. Who needs trends when you have insider info and can manipulate the markets?
This video is for anyone who thinks along the line with this subscriber. The secret. Jordan Baxter was the kind of person who thrived on pressure. At just 27, he had carved out a name for himself at Harris and Dane Financials, a bustling Wall Street firm where fresh blood could quickly rise if they had the stomach for risk. He was ambitious, laser-focused, and, most importantly, he knew how to navigate the frenetic world of trading. But the edge he was looking for, the kind of breakthrough that could vault him from an above-average trader to a true market titan, had always eluded him. Until one day when he heard the conversation. It was a sweltering Thursday afternoon when Jordan decided to leave his stuffy cubicle for a breath of fresh air on the office rooftop. He wasn't the only one who had the idea. As he leaned against the railing, the voices of two men drifted from the far corner of the roof. They were speaking low, almost in whispers. But the name of a well-known pharmaceutical company, MedTech Industries, caught Jordan's attention. He remained still, ears straining to catch the details. "Once the merger's finalized, the stock's gonna double overnight," said one voice. "MedTech and Onyx are playing it close to the chest. But within weeks, this will be the biggest corporate acquisition of the year." Jordan's heart pounded. The implications were crystal clear. A merger of this magnitude between two giant corporations would send their stock prices skyrocketing. He lingered just long enough to hear a few more critical details, including a tentative timeline. If this was real, he had just stumbled upon a goldmine of insider information. For a brief moment, a flicker of hesitation surfaced in his mind. Using such information was illegal. But Jordan's ambition was louder than his conscience. He returned to his desk with a head full of ideas and a plan forming faster than his moral compass could spin. The next few weeks were a whirlwind of activity. Jordan quietly funneled every cent he could scrape together into shares of MedTech Industries, making sure to keep his trades small enough to avoid detection, but frequent enough to amass a significant position. The company's stock remained flat, just as he expected. No one else knew what was coming. As days turned into weeks, Jordan could feel the tension in the air. Every time his phone buzzed, he feared it might be some SEC alert or his brokerage raising questions about his sudden burst of trading activity. But nothing happened. The market, the regulators, his colleagues, none of them knew what he had just set into motion. Then, one chilly Friday morning, the news broke. MedTech and Onyx Pharmaceuticals had agreed to merge in a deal valued at $12 billion. The market exploded. MedTech's stock soared by 65% in a single day. Onyx followed suit. By the end of the trading day, Jordan's modest investment had turned into a windfall. He checked his brokerage account, heart hammering in his chest as he watched the digits climb past anything he had ever dreamed possible. Overnight, Jordan went from a struggling young trader to a financial star. He could afford a luxury apartment, a new car, and expensive dinners at places where his name suddenly meant something. Yet he kept a low profile, making sure not to flaunt his newfound wealth. He knew how dangerous it could be to draw attention to himself. But as Jordan's profits grew, so did his thirst for more. The paranoia. At first, Jordan thought he could handle it. The risks seemed minimal, the rewards too tantalizing to resist. But as his financial successes piled up, so did his nerves. The paranoia set in slowly. He started noticing things, little things. Conversations abruptly stopped when he entered a room, colleagues whispering when he wasn't around, glances that lingered a bit too long. One day, while reviewing his trades, his assistant, Liz, looked at him curiously. "You've been killing it lately, Jordan. What's your secret?" Jordan forced a smile. "Just good research," he muttered, but her raised eyebrow told him she wasn't convinced. His sleep became erratic. He lay awake at night, staring at the ceiling, imagining scenarios where the SEC came knocking on his door. Every email felt like it could be a notification from his brokerage, asking about his unusual trading activity. He started looking over his shoulder, scanning every stranger on the street for signs that he was being followed. Jordan's anxiety grew worse when rumors began circulating that the SEC was ramping up investigations into insider trading activities on Wall Street. It was as if the walls were closing in, the air getting thinner. His once casual routine at the office turned into a nerve-wracking ordeal. Any moment now, someone would figure it out, and he'd be ruined. But no matter how scared he was, the lure of more profits always pulled him back in. The investigation hit like a bombshell. One Monday morning, as Jordan sat down at his desk, an email flashed across his screen. It was a mass communication from the firm's legal department. There had been a subpoena. The SEC was investigating suspicious trades related to Medtech's merger. The cold sweat broke out on Jordan's forehead. His fingers froze on the keyboard. He had been careful. No one knew about that rooftop conversation, and he hadn't made any reckless trades that could be easily linked to him. But now the vague paranoia that had been gnawing at him for months was very real. His phone rang. It was his boss, calling him into his office. Jordan tried to play it cool, walking into the room with a forced air of confidence, but he could feel his knees trembling. Inside, his boss, a hardened man in his 50s, with a stern face, looked over a few papers. "Jordan, I've been hearing about some stellar trades you've made recently. Profits on Medtech, right? Great timing." "Yeah," Jordan said, his voice cracking slightly. "Just a lucky guess." His boss's eyes narrowed. "Lucky guess, huh? Funny thing about the markets, luck doesn't usually look that consistent." There was a pause, the tension suffocating. "The SEC has requested trading records from the firm. We're cooperating fully. Don't worry about anything, unless there's something you'd like to share." Jordan's heart raced. He smiled weakly, shaking his head. "Nothing to share, just doing my job." But inside, panic gripped him. The SEC was closing in, and he knew the firm would throw him to the wolves if it came down to it. They'd protect their reputation, not him. That night, Jordan barely slept. The following morning, he woke to a pounding at his door. When he opened it, two men in suits were standing in the hallway, flashing their badges. "Jordan Baxter, we need you to come with us." The final twist. The interrogation room was cold and sterile, much like the feeling in Jordan's stomach. The agents laid out a series of questions, each one more damning than the last. They had his trading records, his financial statements, and most terrifying of all, they had a witness. Someone close to Jordan had tipped off the authorities, giving them just enough evidence to open an investigation into his trades. He tried to think, who could have betrayed him? Liz, his assistant. One of his colleagues. The thought gnawed at him as the agents pressed on. They asked about specific trades, timing, and his research methods. He stammered through weak defenses, but it was clear they had more information than he thought. The final blow came when they produced the name of the witness. Ben, one of the senior traders at the firm. Jordan's head spun. Ben had mentored him, had even congratulated him on his recent successes. Why would he betray him? It hit Jordan like a train. Ben wasn't just betraying him, he was covering for himself. Ben had likely been involved in other shady deals, and by offering up Jordan as a scapegoat, he was shielding his own illegal activities. As Jordan sat there, feeling the weight of his choices crashing down, he realized he had been nothing more than a pawn in a much larger game. Jordan was eventually charged with insider trading. His assets were frozen, his reputation destroyed, and his once promising career left in ruins. The media branded him a symbol of Wall Street greed, while Ben continued to operate behind the scenes, his illicit activities undetected. Control is an illusion. Markets are chaotic and unpredictable, driven by countless variables. Believing otherwise leads to overconfidence and risky decisions. Instead of chasing control, focus on strategies like diversification and disciplined planning to manage volatility and build a balanced portfolio. Greed undermines stability. Greed tempts traders into impulsive actions like over-leveraging, often resulting in major losses. Sustainable success comes from clear financial goals and a long-term focus, prioritizing well-researched investments over speculative trades. Emotional discipline is essential. Fear and greed cloud judgment, often leading to costly mistakes. A solid plan with risk limits and stop losses helps traders stay rational under pressure. Emotional resilience and learning from setbacks are key to navigating turbulent markets. Shortcuts come at a high cost. Unethical shortcuts like insider trading risk legal trouble and reputational damage. True success lies in mastering skills like analysis and risk management, building sustainable growth through consistent effort and integrity. Risk management is non-negotiable. Without proper risk management, even minor losses can escalate. Techniques like diversification and stop-loss orders protect capital, ensuring traders can survive volatility and seize future opportunities. Ethics are key to long-term success. Integrity isn't just ethical, it's practical. Upholding trust attracts valuable partnerships and safeguards against scandals that can destroy reputations. Ethical trading fosters credibility and sustained growth. The takeaway: trading success relies on discipline, ethics, and risk management. Chasing illusions of control or shortcuts undermines growth, while a focus on strategy and resilience leads to lasting profitability. James reluctantly arrived at the weekend trading seminar. He'd already given up on trading, or at least that's what he told himself after his last losing streak wiped out most of his account. The promise of financial freedom and passive income had lured him into the markets, only for the roller coaster of gains and losses left him exhausted and broke. He'd read every book, watched countless tutorials, and spent hours glued to charts. Yet here he was, no better off than when he'd started, feeling more like a gambler than a skilled trader. Approaching the seminar hall, James was reminded of every trading course, every webinar, every seminar he'd been through. He expected the usual flashy slideshows, motivational quotes, and promises of secrets to trading success. Instead, he found himself in a dimly lit room which was quiet, which was almost too quiet. A single figure sat at the front, a man in a plain suit with a reserved smile, a contrast to the usual showman. His demeanor was calm, understated. When he spoke, it was in a soft tone that demanded attention. Trading is simple, the man began, but almost no one can make it work consistently. Anyone know why? James waited for the usual spiel, but the man said nothing more. Instead, he picked up a small, ordinary coin, held it up for everyone to see, and flipped it high into the air. Heads. He flipped it again. Tails. Then he tossed it to James, who caught it instinctively. "What's the coin for?" James asked, puzzled. "Flip it 5 times, the man said, leaning back with a calm smile. James shrugged and flipped it 5 times. Heads, tails, heads, tails, heads. He looked at the man, unsure of what he was supposed to take from this exercise. "Perfect," the man said. "Now, what if I told you that your next 10 flips would each land on heads?" James frowned. "Well, that's almost impossible." "Precisely. And yet, every day, traders bet like they know where the coin will land, convinced that they've cracked the market." The man took back the coin and tucked it into his pocket. "What happens if you believe, without question, that the next flip will be heads?" "You'd lose half the time," James replied, smiling uneasily. "More than that," the man continued. "You'd likely lose more than you gain because, in the market, every flip is tied to a lot more than just chance. Every flip is tied to your emotions, your biases, and your risk tolerance. The moment you believe you know the outcome, you stop seeing reality. You only see your expectations, and in trading, expectations are dangerous." The man paused, letting his words sink in as he scanned the room, his eyes finally settling back on James. Most people approach trading as if it's a series of certainties, but the market is a complex web of probabilities. Yet, traders, new and experienced alike, cling to predictions, ignoring what the market is actually telling them. They convince themselves they have insight, patterns, or knowledge that assures them of success, and when things go sideways, they react emotionally, trying to wrestle with forces they can't control. The truth is, anyone can trade, but few can handle the uncertainty that real trading demands. James shifted in his seat, feeling exposed. He had done exactly that, thinking he had the market figured out, only to spiral with each unexpected loss. The man continued, "A true trader doesn't approach the market with rigid expectations, but with adaptability. The coin is a reminder that every trade can go either way. And the moment you forget that, the market will remind you, painfully." Another participant raised a hand. "So, if it's all just probability, what's the point? How do we succeed if we can't rely on patterns or strategies?" The man smiled knowingly. "You don't abandon strategy, but you trade knowing each outcome is uncertain. You control what you can, your position size, your risk, when to enter, and most importantly, when to walk away. Over time, probability favors those who accept it. Success in trading isn't about winning every trade. It's about staying in the game long enough to let your edge play out." James sat quietly, the pieces falling into place. He'd been so focused on finding certainty that he'd ignored the reality of trading. It's a game of probabilities, one where success belongs not to those who seek to win every time, but to those who respect the process, manage their risks, and adapt to whatever the market throws at them. The man looked at James, a spark of understanding lighting up in his gaze. "The secret," he said, "isn't in knowing where the coin will land. It's in knowing you can't know, and building a plan that works regardless." Think in probabilities, not certainties. Trading isn't about predicting the market with absolute certainty. It's about playing the odds. Like flipping a coin, no single trade guarantees success, but consistently applied strategies can yield favorable results over time. Shifting to a probabilistic mindset helps traders focus on the bigger picture and avoid the pitfalls of overconfidence. Detach from results. Treating each trade as a reflection of skill creates emotional highs and lows that lead to impulsive decisions. Real success lies in trusting a disciplined process. Viewing trades as steps in a long journey helps traders maintain clarity and avoid the destructive cycle of chasing losses. Prioritize risk management. Without solid risk management, even small losses can spiral out of control. Limiting risk to a small percentage of capital per trade and using tools like stop-loss orders safeguard both finances and mental resilience, ensuring survival in volatile markets. Stop searching for the secret. There's no perfect system for guaranteed success. Markets are dynamic, driven by countless variables. Instead of chasing illusions, focus on adaptability and mastering fundamentals, refining strategies as conditions evolve. The power of sitting out. FOMO often leads to impulsive trades, but knowing when to sit out is key to long-term success. Waiting for high-probability setups protects capital and fosters patience, allowing traders to act with precision when opportunities align with their strategy. The takeaway: trading isn't about constant action or certainty. Success comes from managing risks, embracing uncertainty, and staying patient. It's a marathon, where survival and discipline pave the way for sustainable profitability. Chris couldn't believe his luck. It was his first big trade, and it was perfect. He had timed the entry flawlessly, set his stop-loss at just the right place, and watched in amazement as the market rocketed straight to his take-profit target. And by the end of the day, he had doubled his investment. "This is it," he whispered, staring at his screen in awe. "I've cracked the code." The adrenaline coursing through his veins was addictive. Every chart, every trade from now on, had to be just as perfect and make him good money. The following week, Chris sat at his desk. A new setup was forming, and everything looked right. The trend, the indicators, the volume, all looked right. His entry criteria had all been met. But just as his finger hovered over the mouse to place the trade, doubt crept in. He hesitated, watching the price fluctuate. What if I'm wrong this time? I'll just wait for more confirmation, he told himself. But the confirmation never came, at least not until the trade had already taken off without him. The price hit his predicted target, mocking him with the missed opportunity. Frustrated, Chris slammed his fist on the desk. "I can't afford to get it wrong," he muttered. By the end of the week, he placed only one trade, exiting early because it didn't feel perfect. His account showed a small loss, not from the market, but from his own fear of imperfection. As the weeks rolled on, Chris's pursuit of perfection spiraled. His trading screen became a mess of indicators, oscillators, and news tabs. He spent hours analyzing potential setups, convinced he needed every piece of data to ensure success. Out of frustration, Chris reached out to his mentor, Frank, an experienced trader he had met in an online community. "I'm stuck," Chris admitted during their call. "Every time I see a setup, I second-guess myself, and when I do take a trade, it's never good enough." Frank listened patiently before responding. "You're sabotaging yourself," he said bluntly. "You think you're being careful, but really, you're just scared." "Scared?" Chris scoffed. "I'm just trying to get it right." Frank chuckled. "Exactly. You're so afraid of making a mistake that you're doing nothing. Trading isn't about being perfect, it's about being consistent. You'll never get it right every time, but you can still win by managing your mistakes and staying in the game." That night, Chris replayed Frank's words in his mind. For the first time, he saw his trading habits for what they were: avoidance, disguised as careful planning. He wasn't only avoiding losses, he was also avoiding failure. And in so doing, he was failing anyway. The next couple of months, he made a bold decision. Instead of aiming for the perfect trade, he set a simpler goal: to take any trade that fit his plan, without overthinking. When the first opportunity came, Chris placed the trade without hesitation. It wasn't perfect, and he got stopped out. The second trade was also a loss, but the third and fourth hit their targets. By the end of the trading month, his account was up, not dramatically, but steadily. For the first time, Chris felt calm. The outcome wasn't perfect, but he was making progress. As Chris turned off his screen, Frank's words echoed in his mind. "You'll never get it right every time, but you can make money by staying in the game." Chris had taken a step forward, but a thought lingered. Can I really learn to embrace losses? Or will the pursuit of perfection always haunt me? The question remained unanswered, but one thing was clear: the only way to find out was to keep trading and keep growing. Losses are inevitable. Accept them. Losses are a natural part of trading, not personal failures. The market is unpredictable, and even sound setups can fail due to randomness. Instead of obsessively analyzing losses in search of what went wrong, focus on managing risk and accepting that no strategy eliminates losses entirely. Trading is about probabilities, not perfection. Avoid analysis paralysis. Overanalyzing every detail leads to hesitation and missed opportunities. Striving for a perfect trade often disguises fear of making mistakes. Simplify your process with clear entry, exit, and stop-loss rules, and trust your plan to act decisively. Consistency outweighs perfection, and overcomplicating trades erodes confidence. Set realistic expectations. Unrealistic goals, like aiming for a 100% win rate or immediate wealth, lead to frustration and impulsive decisions. Understand that even the best traders face losing streaks. Focus on the long-term growth of your account rather than individual trades. Evaluate performance over a series of trades and embrace small, steady gains as a path to success. Build confidence with small trades. Start with smaller position sizes to reduce the emotional weight of each trade. Lower stakes allow you to focus on refining your strategy, improving decision-making, and staying calm even when trades don't go as planned. Small, manageable losses help you build the confidence needed to handle larger positions later. Learn, adapt, and move on. Every trade, win or lose, is an opportunity to learn. Reflect constructively on whether you followed your plan and manage risk appropriately. Avoid dwelling on losses or obsessing over missed opportunities, as these emotional traps lead to impulsive decisions. Progress, not perfection, should be your ultimate goal. Handling losses is one of the hardest but most crucial skills in trading. Success lies in accepting uncertainty, focusing on consistency, managing risk effectively, and learning from every experience. Trading isn't about never losing. It's about staying in the game, adapting, and growing over time. The market is weird today, I thought to myself. Frantic, volatile, a chaotic symphony of digital warfare as traders battled against the pulse of the markets. I could feel the frenetic energy on my screen as fortunes were made and lost in a blink of an eye. But in the midst of this manic dance, I sat perfectly still, my fingers poised over my mouse, but not moving. Unlike other traders I knew of, I wasn't frantically clicking from stock to stock, pair to pair. My eyes weren't darting between 10 different charts. I wasn't trading oil futures, gold contracts, or the latest crypto craze. No, I was focused on one thing, and one thing only: the Euro-USD Forex pair. For many years, I traded nothing but this single pair. It had become an obsession, my entire world. While other traders chased trends, diversified portfolios, and scrambled to keep up with the whims of the market, I had pared everything down to this one strategy, this one focal point. At this point in my trading journey, I believe true mastery can only come from a singular focus. One pair, one goal, one life. But on this fateful day, something was different. An email alert had arrived earlier that morning, one that made my stomach churn. My account had dwindled dangerously close to the margin call. After years of dogged persistence, after years of pouring my heart, mind, and soul into the art of trading, I was about to lose everything. "This is your final week to recover," the message read. "Margin is running thin." My hand trembled slightly as I hovered my mouse, watching the Euro-USD pair tick down further into the red. My heart beat faster, not from excitement, but from a dull, crippling fear. I wasn't a man who panicked easily. I had weathered brutal losses in the past. But this felt different. This felt final. The market had been wild for months, volatile beyond anything I'd ever seen. Every strategy, every careful calculation, every pattern I had once trusted seemed to betray me. For a moment, I leaned back in my chair and closed my eyes. Years of my life were on the line. Years of sleepless nights, 5 years spent staring at these screens, dissecting every economic report, reading the minutiae of every central bank statement, looking for the tiniest edge, the smallest sign. All of it had been for one thing: to prove that singular focus was the key, that if you committed entirely to one thing, you could master it. You could conquer it. I haven't always been this way, though. There was a time when I was just like other traders, diversified, scattered, strategy hopping, and chasing one hot tip after another. My early success had come fairly easy. When I started trading, I had it all: the lucrative trades, a nice apartment in the city, and Sarah. Sarah. Her name hit me like a cold slap across the face. Years had passed since she'd left, but the wound hadn't fully healed. If anything, it had festered. I still vividly remember the night she walked out. One of the few memories that still cut through the haze of numbers and charts that consumed my days. "You're never really here, Harry," she'd said as she packed her bag. "You're always chasing something. You have one foot in everything, but you're not committed to anything." I didn't argue. What would have been the point? She was right. My life had become a frantic juggling act. Dozens of trades, countless strategies, always chasing the next high, the next win. And somewhere in that chaos, I'd lost her. As the door clicked shut behind her, I stood there for hours, staring at the empty space she left behind. The silence was unbearable. In that moment, something in me snapped. The pain of her leaving hadn't been the only thing that broke me. It was the realization that she hadn't just walked out on me. She had walked out on the fragmented, scattered mess I had become. That night was the night I made a choice, a vow to myself, to focus on one, just one. I sold off everything I had, stocks, commodities, futures, and chose a single forex pair to trade, Euro USD. It was old, stable, the beating heart of the global financial system. I told myself that if I could master this one pair, if I could focus all my energy into just this, I would find success. Not just financial success, but a sense of control, a sense of meaning that had always eluded me. And for a time, it worked. I became obsessive, learning everything I could about the pair. I woke up every morning before dawn to check European market reports, followed every political shift in the Eurozone, and scrutinized every word from the Federal Reserve like a hawk. I found patterns others couldn't see, anomalies that whispered to me in the noise of the markets. Slowly, steadily, my account grew. It wasn't the meteoric rise I had once experienced in my younger days, but it was steady, predictable, consistent. Other traders called me crazy for narrowing my focus so much, but I didn't care. I felt in control. But markets have a way of humbling even the most focused traders. The past few months had been a whirlwind of chaos, global events beyond anyone's control that sent the euro-dollar pair into wild fluctuations. Central banks had made policy shifts no one had predicted. Political unrest in Europe had blindsided everyone. And no matter how much I studied, no matter how much I fine-tuned my strategy, the market seemed determined to rip everything away from me. I was down almost 40% in the last few months. And now, with my margin running thin, I was teetering on the edge of financial ruin. One bad trade, one wrong move, and I would be wiped out completely. I opened my eyes and stared at the screen again. The numbers danced in front of me, mocking me. I felt the cold grip of fear tightening around my chest. This wasn't just about money anymore. This was about something far deeper. It was about the vow I'd made to myself that night Sarah left. My phone buzzed on the desk. Distracted, I glanced at it. It was a message from Sarah. For a moment, my heart skipped. She hadn't reached out to me in over a year. Slowly, I picked up the phone. I heard you're still trading. I don't know if you remember, but we used to say that if something was worth fighting for, it was worth fighting for fully. I hope you find that one thing worth fighting for. My breath was caught in my throat. The words blurred as I read them again and again, my chest tightening with a mix of emotions I couldn't quite place. She remembered, despite everything. She remembered the conversations we used to have, the dreams we used to share. I felt a tear slide down my cheek, but I didn't wipe it away. Instead, I let it fall. A single drop of vulnerability in a world where I'd built walls too high for anyone to see over. I'd thought Sarah left because I wasn't enough for her, because my obsession with my career had driven her away. But maybe, just maybe, it was because I hadn't been whole. I had been fragmented, always splitting my attention, my life, my energy between too many things. And now, with everything on the line, the irony wasn't lost on me. I had devoted myself entirely to one thing, to one trade, and it still wasn't enough. Or maybe I realized that had never been the point. My hand hovered over the mouse. The Euro USD pair flickered again, still in the red, still dropping. My hand trembled, torn between placing another desperate trade or cutting my losses. But something deep inside me stirred, a quiet voice. I closed my eyes. No. It wasn't about one trade. It wasn't even about winning or losing that trade. It was about life. It was about the choices I make and the things I fight for. In that moment, I did something I hadn't done in years. I logged out. And for the first time in as long as I could remember, I stood up from my desk without the crushing weight of uncertainty on my shoulders. Outside, the sun was setting, casting a warm golden glow over the city's skyline. I stared out the window, breathing deeply as if seeing the world for the first time in years. I wasn't walking away from the trade forever. I knew that. But I was walking away from the belief that one meant singular, that it meant isolation, that it meant shutting out everything else in life. The power of one was never about narrowing my world to a single trade. It was about focus. It was about clarity. It was about knowing what truly mattered and committing to it fully. The next morning, I returned to my desk. My strategy hadn't changed. My focus hadn't shifted. I still traded only Euro USD. I still believed in the power of focusing on one thing, of mastering it. But now, there was something different. I now know that this one single trade wasn't going to make or break me. So I stopped the bleeding. I took my loss. This was the moment I truly understood and imbibed the habit of managing my risk better. Going forward, I traded with purpose, not with desperation. I sent a message to Sarah. I told her I have found my one thing. I told her I had found my purpose. Months later, my account was back in the black. Not wildly profitable, but steady, stable, consistent. And my life? Well, I'll leave you to tell how you feel it's going. Mastery through singular focus. Focusing on one market or strategy allows traders to develop deep expertise. The dedication to the Euro-USD pair reduced distractions and provided a competitive edge, proving that focus beats scattered efforts. Reduce noise for better decision-making. Simplifying focus eliminates emotional and informational overload. By concentrating on fewer variables, traders can make precise decisions and prioritize quality over quantity. One trade doesn't define you. No single trade determines success. Viewing losses as part of a larger journey helps traders stay resilient and avoid emotional reactions that can derail progress. Reassess, don't abandon. Losses don't mean failure. Pausing to reflect and adjust, as the speaker did, ensures continuous improvement without impulsive decisions. Balance purpose and obsession. Purpose drives success, while obsession leads to burnout. Traders must focus with discipline, setting boundaries to sustain both performance and well-being. Emotional discipline and risk management are key. Staying calm during volatile moments and combining emotional control with strong risk management protects both capital and mental clarity. Consistency over impulsiveness. Success comes from consistent execution of a strategy, not chasing quick wins. The steady approach to trading Euro-USD proved that patience yields sustainable profits. Trading success lies in doing less but better. Focus, discipline, and consistency create a sustainable path to mastery and long-term growth. Focus truly is power. In the heart of New York City, where fortunes are made and lost, one man's name became synonymous with greed. Bernard L. Madoff was born to a modest Jewish family. They didn't have much, but his early ambitions led him to start his own investment firm in 1960 with just $5,000, a small fortune earned from lifeguarding and installing sprinkler systems. His firm, Bernard L. Madoff Investment Securities, started as a penny stock brokerage, trading low-cost shares. Unlike many of his contemporaries, Madoff embraced the emerging technology of the time, which allowed him to take advantage of real-time stock quotes. Madoff was a pioneer, leveraging cutting-edge technology to create one of the first electronic trading platforms. This innovation set him apart, earning him the respect and admiration of peers and clients alike. This technological edge gave Madoff a significant advantage. He was an early adopter of computer-based trading, which allowed him to offer his clients faster and more reliable service, setting his firm apart from others. To the world, Bernard L. Madoff was a Wall Street wizard, a man whose financial and technological acumen had earned him not only billions of dollars, but also the unwavering trust of the world's elite. And for decades, his investment firm appeared to be a beacon of financial stability and growth. In the 1970s, Madoff's firm grew significantly, partly due to his involvement in developing the Nasdaq stock exchange. His firm became one of the largest market makers, meaning they were one of the companies that facilitated the buying and selling of stocks on behalf of clients, often acting as both the buyer and seller to provide liquidity in the market. By the 1980s, Bernie Madoff had become a titan of finance. His firm was one of the largest market makers on Wall Street, processing up to 10% of the New York Stock Exchange's trading volume. Madoff was not just a financial figure. He was a socialite, rubbing shoulders with the rich and powerful. He served as the chairman of Nasdaq and was a trusted advisor to charitable organizations and educational institutions. His clients included Hollywood stars, international banks, and even vulnerable old people who saw him as a trustworthy guardian of their savings. But behind the polished exterior of Madoff's empire was a labyrinth of deceit. Behind the scenes, Madoff was constructing something far more sinister, a massive Ponzi scheme built on the trust of those who believed in him the most. Harry Markopolos, a portfolio manager for an equity derivatives asset management firm in Boston, was asked to analyze Madoff's money-making methods, and he quickly discovered Madoff was running an old-fashioned Ponzi scheme. I knew something was wrong. The numbers didn't add up. For years, I tried to warn the SEC, but no one listened. They were blinded by Madoff's reputation, by the image he had carefully crafted over decades. The returns Madoff promised, steady, unerring, and almost too good to be true, were precisely that. Too good to be true. Madoff wasn't investing his clients' money. He was using it to pay off other investors, creating the illusion of success. For years, this illusion held, unchallenged by the authorities or the public. As Madoff's key lieutenant, Frank DiPasquale, puts it, "We called it the magic machine. Bernie would hand me the numbers, and I'd create the statements. It was all fake." But the truth is, many people didn't want to believe it. They were so desperate for financial success that they clung to the illusion of Bernie Madoff as a genius who could make their dreams come true. The illusion came crashing down in December 2008. In the wake of the global financial crisis, Madoff's scheme unraveled. He confessed to his sons, who turned him in to the authorities. The scale of the fraud was staggering. Over $65 billion had vanished, leaving thousands of victims in financial ruin. One of his victims said, "He stole everything. My wife's medical bills, our retirement. We lost it all. And for what? So he could live like a king." In 2009, Madoff was sentenced to 150 years in prison. His fall was as dramatic as his rise, leaving behind a trail of devastation. But the questions linger. How could this have happened? How did one man deceive so many for so long? It was a perfect storm of greed, trust, and regulatory failure. Madoff was a master manipulator, but he couldn't have done it alone. The system failed at every level, from the SEC to the investors themselves who didn't ask the hard questions. Bernie Madoff died in prison in 2021, taking many of his secrets to the grave. But his legacy endures, a cautionary tale of unchecked ambition, the seductive power of greed, and the devastating impact of betrayal. The power of social proof. Madoff leveraged social proof to gain credibility, attracting investors through his association with the elite and creating an aura of exclusivity. Lesson: be cautious about investments based solely on others' endorsements or reputations. Conduct independent research. The destructive nature of greed. Madoff's insatiable greed led to the largest Ponzi scheme in history, demonstrating how unchecked ambition can lead to catastrophic outcomes. Lesson: recognize greed in trading and manage it. Avoid chasing excessive profits at the cost of sound strategy, such as adjusting take profits irrationally. Investment psychology and fear of missing out. The promise of high, consistent returns preyed on investors' desire for financial security and fear of missing out. Lesson: don't fall for get-rich-quick schemes. Diversify investments and focus on long-term, sustainable growth. The seduction of consistency. Madoff's scheme capitalized on the human desire for predictable success, masking fraud under the guise of steady returns. Lesson: question perfect records and avoid unrealistic expectations of always winning in trading. The unsustainability of Ponzi schemes. Madoff's house of cards collapsed under financial pressure in 2008, leaving thousands in ruin. Lesson: be wary of financial opportunities promising extraordinary gains with minimal risk. Real trading success requires effort, knowledge, and patience. When Sir Alex Ferguson took charge of Manchester United in November of 1986, the club was a shadow of its former self. The glory days of the Busby Babes were distant memories, and United was stuck in mediocrity, trailing far behind rivals like Liverpool, who dominated English football at the time. The club hadn't won a league title in nearly 2 decades, and the pressure was immense, but Ferguson wasn't one to shy away from a challenge. Ferguson came with a reputation as a fiery Scotsman who had worked wonders at Aberdeen, breaking the old firm's dominance in Scotland and even defeating Real Madrid to claim the 1983 Cup Winners' Cup. But English football was a different game. At United, he inherited a squad of underperforming players, a fractured club culture, and a divided boardroom unsure of the club's future direction. His first 3 years was a nightmare. Results were inconsistent, the team lacked discipline, and the attacking football Ferguson wanted just wasn't happening. Fans were relentless, with banners at Old Trafford calling for his dismissal. One read, 3 years of excuses, and it's still crap. Terra Firti. The media was equally harsh, questioning whether he was the right man for such a high-profile job. But behind the scenes, Ferguson was quietly laying the foundation for success. He overhauled the club's scouting system and prioritized youth development. The club's future is in its academy, he insisted, even as critics clamored for big-name signings. He enforced discipline, even selling star players like Norman Whiteside and Paul McGrath for off-field issues, sending a clear message that no one was bigger than the club. By the 1989 to 1990 season, Ferguson's job was hanging by a thread. The team hit rock bottom, and an FA Cup third-round loss to Nottingham Forest seemed certain to end his tenure. Then fate intervened. Mark Rodden scored a crucial goal to give United a 1-0 victory, keeping Ferguson in the job. That season, United went on to win the FA Cup, Ferguson's first trophy with the club, reigniting belief in his vision. That FA Cup win gave Ferguson the breathing room he desperately needed. Over the next few years, the team began to click. Key signings like Peter Schmeichel and Eric Cantona became the backbone of the squad, while a golden generation of young talents with the likes of Ryan Giggs, Paul Scholes, David Beckham, the Neville brothers, and Nicky Butt emerged from the academy to shape United's future. The breakthrough came in the 1992-93 season, when United finally won the Premier League, ending a 26-year title drought. From there, the trophies started piling up: league titles, FA Cups, and European triumphs. Ferguson's crowning achievement came in the 1998-99 season, when United completed a historic treble, winning the Premier League, FA Cup, and European Champions League. The dramatic Champions League final in Barcelona, where United scored 2 last-minute goals to defeat Bayern Munich, captured Ferguson's never-give-up spirit. "Football, bloody hell," he famously said after the match, summing up the emotion of the moment. Over his 26-year tenure, Ferguson won 38 major trophies, including 13 Premier League titles and 2 Champions League crowns. His adaptability was unmatched. As football evolved, Ferguson stayed ahead by constantly refreshing his squad and tactics. He worked with generation after generation of players, all sharing his relentless winning mentality. Even in his later years, when rivals like Arsene Wenger, Jose Mourinho, and Pep Guardiola emerged, Ferguson found ways to stay competitive. His final Premier League title in 2013 was a masterclass in maximizing his squad's potential. When Ferguson retired in 2013, he left behind a trophy-laden legacy and a blueprint for greatness. His journey, from a manager on the brink of being fired to one of football's greatest icons, remains a testament to persistence, vision, and resilience. Play the long game. Ferguson's long-term vision at Manchester United showed the value of patience and sustainable growth over quick fixes. He built a legacy by investing in youth and focusing on consistent results rather than immediate rewards. Trading lesson: focus on steady, sustainable growth. Avoid impulsive, high-risk trades for short-term gains. Develop a clear, long-term trading strategy that prioritizes resilience and consistency. Confidence without arrogance. Ferguson balanced confidence in his abilities with humility to learn and adapt, preventing overconfidence from leading to poor decisions. Trading lesson: build confidence through preparation and practice, but stay humble. Avoid over-leveraging or ignoring risks due to overconfidence. Adapt to market conditions and learn from mistakes. Resilience through setbacks. Despite immense pressure and failures in his early years, Ferguson persisted by analyzing weaknesses and refining strategies. Trading lesson: losses and challenges are part of the journey. Use setbacks to learn and improve your trading strategies. Don't let temporary failures undermine your long-term goals. Adaptability is key. Ferguson adapted to changing football landscapes, from tactics to technology, ensuring continued success. Trading lesson: stay flexible and open to changes in market conditions, such as shifts from bull to bear markets or the rise of new asset classes like cryptocurrencies. Adapt strategies without losing sight of overarching goals. Strength and collaboration. Ferguson built a unified team by fostering collaboration and trust, emphasizing the power of collective effort. Trading lesson: engage with trading communities, mentors, and peers to gain insights, share strategies, and find support. Collaboration can provide new perspectives and boost motivation during challenges.